Hello everyone. Um, I'm not quite sure if you can hear me clearly. If you can, please just confirm in the chats page. And yeah, let's get right into it. Oh, that's good. That's good. I'm glad that people can hear me, which is a good thing. Um, yeah, welcome to Creative FX. I'm just gonna give people a few minutes to get our number to 15 as promised. Um, I can see we are already at around 14, which is good. So here we are. And I just wanted to share with you a few tips and tricks in terms of marking levels. And for me, I think this is something that's gonna help you because I know a lot of you have got questions around these uh, levels. How do you get around them, and things like that. So I thought maybe I should share with you. You know, So yeah, this is it, guys. That's what the live is about. And again, it's also more so to, talk about the trade that I took, and I'm just gonna share with you the result of the trade as soon as our live is done. And my entry wasn't the best out there. I didn't like it, but I did get good money out of it, which was a good thing. So I'm very happy with that. So welcome to everyone who is getting in, and yeah, let's get right straight into it, guys. And we're gonna be dealing with market levels, and I feel this is a very important topic. So before we start with market levels, I will just quickly talk about some things that I believe are basics and need to be ironed out for the sake of those who are new here and haven't done Btmm, or some people do other strategies, and which I also respect as well, but would want to, add this as one of a strategy or confirmation, whatever you want to take out of it, and so that it helps your trading. At the end of the day, all you need is to, challenge your skill, get your skill to a high level, and if you get right there, you will know that, okay, this is where I then start to apply my rules and become consistent, because I now know what I'm looking for in the market. So let's get right into it, guys. I can see we are now around 30s, which is very good. A good number. At least I won't be talking to myself. So thank you very much, guys. And again, I'm not going to address everything that you want to know, because this is going to be like 30 minutes, so it's going to be brief. I'm only going to be addressing levels, so I'm going to look at the questions here and there to see if someone is saying something, and if I feel it's something in line with what I'm about to share, I'm going to touch on that. But if I feel it's not, it's something that is outside what we are dealing with, I'm very sorry if I don't answer your question. But we're gonna do these lives more often and then discuss some of the questions that you guys might have. So the first thing that I want us to deal with is candlesticks. And I'm not gonna go straight into, what is a candle and how do you identify a candle, right? But the thing that disturbs people the most is the market maker cycle. And for people to identify the market maker cycle and know how it goes, they need to first understand a candlestick, you know. So a candlestick in general, we have what we call open price. So we have what we call open price, and then we have probably low price for the day, and then we have high price for that particular day, and then we also have probably what we call the closing price. All right. So how this candle then goes is we have opening price, low price, high price, and closing price. So this is how a candle goes. Now I want you to translate that into market maker cycle and think about it this way. When we talk about small time frames, we talk about an Asian box. I'm sure all of you have seen an Asian box in our charts. And then we say the market in the mornings or the Asian sessions or accumulation phase, it consolidates within an Asian box, thereby marking the high and the low of an Asian session, and then it breaks out. Let's say this market wants to go up, it breaks out, forms the low of the day, which we then in turn call London patterns, and then the market then starts to move away until it ends the day. Then the market will form the high of the day, which we also anticipate to be an M formation, but not necessarily an M formation. But the reason why we deal with M's and W's, for those who are not aware, it's because these form almost all the time in the market. So that's why we deal with them. But it's not that every time it's supposed to be an M and W. Sometimes it's a straight away trade. You know, sometimes it's a head and shoulder. Sometimes it's a half Batman. It can be several things, you know. But then when we get to this point, we expect the market to do something that it did when it started, which is also the accumulation phase. And again, we'll be having an Asian box on the next day. So that's how a market maker cycle moves. And after that, then we come in and say, okay, we then call it our peak formation. We then say, okay, I call this my level 1. And then I say, I call this my level 2 consolidation. And then I say, I call this my level 3 peak formation. And then I am expecting a reversal. So all we are saying is the market has to at least push 3 times. So it has to at least have 3 visible pushes for us to say we have a market that has moved 3 levels. And this is what confuses people. And then they ask themselves and say, okay, so if we are having 3 levels, then how do I identify them? So for you to identify a market level, to say this is a market level, you need that clear move away from the market to break the previous swing high or low in the market. I don't know if that makes sense. So you've got your market that is moving this way, and then for you to say, oh yeah, I'm in a level, or I've seen a level, you want those swing lows or swing highs to be broken. That's the only way you can say, okay, I've seen that the market is going in this direction. So that is what we expect. So if we see that break, we can then say, all right, I've seen a first level rise. So that's my level 1 rise. And now I am in a consolidation. And then after that, I'm expecting the same thing again the following day. I'm expecting a stop hunt, which is the same thing that you are seeing here, which is the consolidation that I want to see here. So I want to see the whole thing compressed in that pullback there. Compressed in that pullback. Then as soon as they form the low, which is similar to a peak formation, then I want to see a new rise. This is why I started with the candlestick theory. Reason being, the same candlestick theory is the same theory of the market. The market moves the same way it moves in terms of candles. So after I've seen my level 2 rise, what I then expect, I expect a pullback again and a consolidation. But bear in mind, sometimes we have what we call a straightaway trade, and you're not going to see the pullback. But in reality, we'll be saying the pullback is there, even though it is not there. I will show you that in the market in a minute. So this will then call our level 3. So after we have seen our level 3 rise, then we come into a consolidation. Now, what then also confuses people is they say consolidations are levels. Yes, they are right. Some say the rises or the moves away from levels are the levels themselves. They are also correct. But the correct term is a consolidation is level 3 consolidation, level 1 consolidation, level 2 consolidation. Then you have what we call level 1 rise, level 2 rise, level 3 rise, etc., etc., etc. So that is how you identify levels, but you want to see the breaks of structure, as some say in ICT or price action. You want to see the break of structure, which is the same method again. We want to see the break of that structure. We want to see the price closing above the previous high or low of a level for us to say, yes, we have moved a level away. So this market maker cycle, you will see it both on a 1 minute time frame all the way up to a monthly time frame. But because we do not have that kind of money to be holding for the whole year or the whole century or whatever, we then want to see that happen usually on the on D1, on H4 and H1. Those are the kind of time frames that we'll be dealing with, because it's more clearer in those time frames. It's more easy to, to identify and get in the market around those areas. But generally, that is what you expect. All right. And again, I said I'm gonna be answering some of your questions as we go, as long as those questions are in line with what we are dealing with. Now, someone is asking, okay, to what degree is a stop hand allowed to retest the previous level? Now, I'll tell you this one thing. If a dealer forms level 3 and then moves away into level 1 and then moves away into level 2 and then moves away into level 3, I will tell you this, that the dealer is allowed to retest level 3 if he is in level 1. Again, he is allowed to retest level 1 if he is coming from level 2. But he cannot move the whole level 2 move all the way down to level 1. If you see that happen, then it is something else different, something to do with higher time frames. So you expect the market to retest only up to level 1. So if level 2 retests level 1, we don't have a problem. If level 1 retests level 3, we don't have a problem. And again, there is a reason why the market does that. I'll give you an example. Let's say the market is moving from a peak formation, and then all of a sudden it goes into level 1. And the market decides to come back to level 3, and then goes back to level 1, and then goes to level 2, and then goes to level 3. I will tell you that this whole pattern that you are seeing here, all right, this whole pattern that you are seeing here, it's actually signifying something in a higher time frame. The fact that the dealer decided to come and retest level 3 again, there is a possibility that on the higher time frame you have what we call a second leg. So this right here that you see here is actually the second leg, and this is your first leg on the 4-hour time frame. Let's say this is a 1-hour time frame. All right, we are seeing this in a 1-hour time frame, so this is a second leg on the 4-hour time frame. That's the reason why the dealer came back to retest that area. All right, that's the reason why the dealer came to retest that area. I hope I answered your question. Now, the other person is saying how to mark HOD and LODs. Unfortunately, I cannot teach you how to mark that, but I can tell you where to find them. If you want to find HODs and LODs, this is what you want to do. First of all, for those who don't know, HODs are high of the day, LODs are low of the day, and again, there is an indicator to actually mark that for you. It will print you out the high of the day and the low of the day. But I'm just going to put this concept through so someone may understand. You are on a 15 minutes time frame and you just formed a peak maybe on a 15 minutes or 1 hour, whichever. And you are coming from a consolidation, you broke down and you went down, you formed the low of the day, and then you went up 1, 2, 3, and then probably you end the day in consolidation, right? The following day, what you expect is the market to probably give you an equal high as yesterday and then come down and give you a low for the day and then start to do the same thing that it did the previous day and end the day in consolidation. So you're expecting the same thing again on the following day. You expect the market to stop hunt, give you a high, or sometimes it might not even get to that high, but it might consolidate in that area and just quickly go down and give you a low, and then it might continue the following day. All right. Now, about straightaway trades, like I had said, straightaway trades, the market will just go up and never give you that stop hunt, or maybe come back down and test the high and continue going up. That's what you call a straightaway trade. So your Asian boxes will be around this range there, another one somewhere there, another one somewhere there. But all in all, it is a candlestick theory. It's not changing. It is still a candlestick theory. Asian box, which is our accumulation phase, all right, of the candle, or you want to call it a time frame. Then you have a breakout of price, form the low, go and form the high, and then end the day in consolidation. That's what a candle does all the time. So every candle does this. Now we are just translating this into higher time frames. We are amplifying it. That's all about Btmm. We are simply amplifying the behavior of a single candle into different combination of candles. That's the reason why we say mark levels. Now, the reason why we say mark levels is because this whole move is not going to be a straight line. It's not going to be a straight line. At some point, we need to have these accumulation phases coming up as we go. Now, those accumulation phases are then what we call levels, all right, or level consolidations. Now, you have probably heard about this. I'm going to try and type it here and say 3 levels on H1 is equal to 1 level on H4. All right. 3 levels on H4 is equal to 1 level on on D1. And then again, I'll just also put the 15 minutes time frame there and say 3 levels on M15 is equal to 1 level on H1. So that even means 3 levels on 5 minutes is 1 level on 15. If you want to see it, go and check it on the charts. You'll find your M15 will give you, sorry, your M5 will give you like small pushes or pullbacks. And if you go to M15, you realize, oh, that's a whole move of price. And then it gives you again the same thing. And then it gives you a low again. It gives you the same thing. It does this every day. All right. And then it gives you a low again. Then it consolidates probably for the day. So it's doing that in a single day. So you're not going to have Asian boxes on a 5-minute, like, because it's going to be giving you those levels as it goes. But from the H1 perspective now, we are saying a single move on a single day is a level. A single move on a single day is a level. But the most important thing, we want to see the market break that high. Now, another thing you are going to see again in the market is, instead of, I'm going to answer this question because someone asked and said, what do you say about some setups that only show one leg on level 3 and move away? I've already answered that question partly when I said sometimes the dealer will form this and form that and then come back and do that on the 4-hour and do that and then go away. And then I said again, now there are what we call V types of peaks, and those V type of peaks, we're referring to that. The dealer comes down and forms that and then goes into level 1 and goes into level 2 and then maybe let's say level 3 again, another V, and that's it. Now, I'll show you something, all right? If you see a V type of a peak, maybe let's say it's on D1, a V type of a peak like this one, like it's a V. There's no second leg and the market moved away from that zone. I can guarantee you, if you like, go to H4. Let's say this is D1. Go to H4. You'll find the V on D1. On H4, it's actually an M. All right? Now, that M on H4, on H1, it's actually an M, W, M. I don't know if you are realizing something there. That V part on its own, on a 4-hour time frame, it's actually a full M. All right? Go and backtest this if you want on the chart. You will see it. Yet on a smaller time frame than that, those V's are actually M's. So sometimes when you see price consolidating in the same spot for a very long time, it's creating something. So instead of you saying, oh no, price keeps on hitting the same area, it's coming back to the high, going away, it's doing something. And probably this below here is your H1. And that is why you are now frustrated, because it's your H1 and you are trading from H1, yet your H4 is actually doing this and your D1 is actually doing that. So can you see that your D1, you do not have a second leg? Because if you were to have a second leg on D1, if you were to have a second leg, right, it means on H4, you now need this. All right? You now need that. Now, that which I drew on H4, it means on D1, you now need more of that. Every single V will be on an M on H1. Again, go and check that on the charts. You'll see what I'm talking about is exactly what is on the chart. All right. So again, we said we are doing levels and I'm trying to help you to count a level. So now let's go to the chart and try and count a chart. All right. So I took this trade USDJPY, and the reason why I took this trade, because for me it was in level 3 and it was supposed to turn around. And I said, this is good money. And the good part about it is that other pairs had already moved. during that time. So it gave me time to say, okay, I can take this one and just go with it and see how we go. And it gave me good money. So that's one thing that you can do when you know how to count levels. You actually know where you are. So we want to count levels in a span of a whole month from August all through up to today to see where we are in the market. And then you can see how easy it is to count levels if you forget everything else that you know and just focus on what I'm going to show you. And I know this is what people have been waiting for, so let's get right into it. I've shown you principles that you need to follow, and I'm pretty sure some of you saw that. And if you want to rewatch this live stream, you'll rewatch it. It's going to help you. But now let's get straight into the charts so that we help people and keep our live stream short. All right. Now, here we are on USDJPY, and my entry was here, which I didn't like because one kind of a person who likes to get my entries around there. So I didn't really get that kind of an entry. So I was really pissed off at myself for that. But nonetheless, I did make profit out of it, which is very good. So I need those kind of entries where when I enter on them, I do not have to start thinking whether is it going to go in profit or is it going to wait for some time, you know, those kind of things. I don't like that. Sometimes I do have bad entries and I don't like them. So I always tell myself I need to improve my entries. But we're not talking about entries today. We're talking about levels. So let's go right back in the chart and we're going to start from here. Now, the reason why I am saying we're going to start from here is very simple. All right. When you are marking levels, you want to find the lowest point in the chart. Sorry about that. You want to find the lowest point in the chart. Now, someone might ask, how do I find the lowest point in the chart? Look for a peak formation. And someone might ask again, how do I look for a peak formation? If I zoom this chart and make it smaller, all right? And then you ask me, where is a peak formation? My first answer to you will be, there is a peak formation there. Whether I know or not, that is where price tend. What is a peak formation? A peak formation is an area of reversal. It's simple as that. It's an area of reversal where price is going to turn around, or an end of a trend and the beginning of a new trend. That is a peak formation. Now you're going to hear terms like peak formation low, peak formation high. It simply means the market got to a certain point and it decided to reverse. That's what a peak formation is. All right. So don't listen to anyone complicating things for you. A peak formation is an end of a trend and the beginning of a new trend. So if I come here and, for instance, look at this chart right here, I'll say that's a peak formation. And it doesn't mean in the middle here there are no peak formations. Peak formations are there. Some are called peak resets. Some are called peak formations. Some are head and shoulders. Some are half Batmans, M's and W's, etc. They are all peak formations. But when we say pick a peak formation, you should be able to pick from the start where a trend started. Then as you count levels along the line, you will discover that there's probably another peak formation there. There's probably a peak reset there. I'm just giving as an example, right? You then discover, oh, there is more peak formations, but at least the first peak formation that you saw is where a price turned around. All right. So no one should confuse you. Peak formation where price turned around. So this that I'm marking here is where price turned around. So that's a peak formation. All right. Now, enough about peak formations. Let's get back to marking our chart. Okay. So we said we want to start marking from the lowest point. So this is what we're going to do. The reason why I chose this point, it's on the 5th of August. And to me, it is the lowest point. So I cannot mark from the 2nd and the 1st because there is no lower point there. We were actually going down, but this is where price turned around. Okay, so this is my peak formation. For those who were asking about V peak formations, this is a type of a V peak formation because you cannot clearly see the W. But when you go to the 15 minutes time frame, you actually see the W. That is what I said. When you see a V on another time frame, go to a smaller time frame, you actually see a proper peak formation in another time frame. Now, this being my level 3, I'm just gonna label so that it becomes clean for everyone to see. All right. Sorry, I'm just gonna try and change my color and make it white. All right, and also my text font, probably let's make it 14. Yes, that's good. So that is level 3. Level 3, we find peak formations. Remember that in level 3, we find peak formations. Now, we said one level is equals to 1 day. So a single move is equal to 1 day. All right. So I'm going to zoom my chart so that it becomes clear for everyone and you follow through. Now, which one is my first level rise? My first level rise, I'm going to put my pen on the second leg of my peak. This one is a V peak, so I'm going to put anywhere. But if you have a W type of a peak, then you can put on the second leg of your peak. Then you move up and say my first high is my first rise. All right. So this is my level 1 rise. All right. So this is my level 1 rise. Okay. Now, this being my level 1 rise, and if I'm going to make a mistake, I'll tell you that I've made a mistake here. But if I don't make one, I'll be sure wherever we are going, I will get to a place where I will call level 3 and you actually see price turn around. That's when you will see that, oh yeah, definitely the levels are being counted. All right. Now, on the second day, which is the 6th, price went up, price came down, price went up, price came down. Do you see that price never closed above the high that we marked? All right, I'm just going to put this box right here. Price never closed above the high of the first level. Remember what we said? A level is a push that breaks the high, closes above. So we expect the following day to actually close beyond or above. So in this case, our opening price is right here and our closing price is right there. So it means price went above the level and came back into the level. So I consider it that the market did not move. Get that right, because we're going to see a lot of these things as we go. And you can apply it everywhere. This is where people then get confused and be like, now I can't see where I am. I can't count the levels. I think you're hiding some information from us and all that. I'm free to share this information, which is why I'm doing this live for you guys, all right? So anything that does not close above on the next day, it is within the same level. So in this case, we are still within the same level. Now, if I want, I can extend my box to that high there. The reason why I'm extending, I'm just making it look neat. That's all. But it does not change the fact that the high of my box is the line that I drew there. So if you don't want it to confuse you, then leave your box in the same spot there. That's why you see some people when you're looking at their YouTube videos, you see them, they'll just come in here and say, there is your first level rise. And then they'll come here and say, okay, you've got your second level rise. And then you're looking at it, you're like, but you're not explaining to me what happened on the first day. You get my point? So which is why I'm saying They just bungled it up because they are so used to seeing it. Now they know what they're looking for. So mark this is your first. On the second day, nothing happened. All right. I hope this is clear because we're going to meet this next time. Now, on this particular day where we see a big candle go up, the green candle, can you see that price actually went up and closed above the first level rise? All right. Price closed way above. So that means this is our second level rise. So remember about level consolidation. That means this becomes our level consolidation. All right. I'm just going to mark it for you and say L1 cons. I'll just write a shortcut. I hope you understand and forgive me. All right. So this is our first level consolidation. Then this becomes our second level, or I'll just write L2 rise. Okay. This becomes our L2 rise. All right. So we have seen level 3. We have seen first level rise, first level consolidation, second level rise. Now we are looking for second level consolidation. We are looking for second level consolidation. Now, again, I will take my pen and I will mark here. All I want to see is price actually closed above the level 2 rise. Now, do you realize that in all these days, day 1, day 2, day 3, day 4, which is the 8th of August, all through to the 13th, price never broke that high. All right? Price never broke that high. That simple means we are still within level 2. So what does that mean? That means this whole thing right here is level 2 consolidation. All right. So I'll mark all this as my level 2 consolidation because we never attempted to break the high of level 2 rise, and we even never closed above it. So I'll then label this as my level 2 consolidation. And someone will be like, that's a very long level consolidation. That's typically what happens in level 2 sometimes. Level 2 sometimes will chop and chop for the whole week or whole month or whatever. And sometimes level 2 can chop and drop into level 1 and come back to level 2 and chop again. And that frustrates people. And the next thing they'll be like, I don't know where price is. I'm getting out of this. And of course, I'm not saying trade a consolidation, but some people will be like, I don't know where price is going anymore, so I'm leaving this. All right. Now, this is our level 2 consolidation. And what happens on this day? 15th of August, price goes all the way up and price closes above level 2 rise. So what we call that? We call it level 3 rise. Again, you can either mark it from the lowest point all the way up there, or if you want, you can mark it all the way from here. It's still up to you. It doesn't matter where you put your box in. You already know this is your level 3 rise. And for those that will think, oh, maybe you looked at this chart and you was like, I'm going to do this one. I didn't look at this chart, but it's something that I'm so used to now, so I know what I'm looking for, all right? Level 2 rise. Okay, so after my level 2 rise, what do I want to see? I want to see a market reversal. So I want to see a peak formation. So where am I? I am now at a peak formation. And I will say this, peak formations will never be in the shape that you like. All right. Some people want peak formations to be in a shape that they like to actually say, oh, that's a beautiful M, that's a beautiful W. Yes, sometimes it's gonna be like that, but not all the time. Understand it, guys. It's not gonna be like that all the time. Now, look at what we just did. All right, just go there, digest it, look at what we just did. We just moved all the way from level 3 and moved up into level 1, into level 2, and now we are in level 3. Isn't that beautiful? All right, so we want to see if we will get to today and say, okay, yeah, this is where we are today. Okay, we move on, and from level 3 consolidation, we said we expect the market to reverse. Now, before we go further on that, let me take you back to the chart. All right. Now, remember what I said. We form level 3, all right? And then we go level 1, we go level 2, and then we go level 3. Do you realize that this is still the same thing as the market maker cycle that we always preach all the time? Consolidation, form the low, push 1, push 2, then push 3, and then end the day in consolidation. It's still the same thing. It's not different. All right? It's still the same. It's not different. All you need to do is just apply it on a bigger picture. That's all you're doing. Apply it on a bigger picture. All right. Now let's go back to our chart. So here we are back to our chart, and we're expecting a reversal. Every time when we get to level 3, there's supposed to be a reversal. Now, two things can happen. Number one, we can have a reversal. Number two, we can have what we call resets. I'm going to teach this on another day. Resets are there to continue a previously completed trend. So say you were moving up like this, all right? You're moving up like this, and you get there, and then price still wants to go up. It will come down first, reset, which is another peak formation, and then go up. So the peak formations that you will have a peak formation there, you will have a peak formation there, which is your level 3, like the same way we marked. Then you will have what we call a peak reset, and then you will have a new trend. That's what we call a peak reset. A peak reset is just there to continue a previously completed trend. Right. Now let's continue with our marking. So on this day, we then have the first drop. All right. And I'll tell you, if you mark your chart and you put in your levels like this, do not ever think that, oh, maybe I'm making a mistake, maybe my levels are not correct, blah, blah, and you start to doubt yourself. Keep it as is and just watch what price will do. That's all that you need to do, because you don't want to regret later on and be like, oh, man, I've just realized that, yeah, I got it right the first time, then I changed it and all that. So just keep it as is and see what price does, okay? So this is our first drop. So I'll mark this as level, all right, level 1 drop, okay? Level 1 drop. Now on the following day, remember what I said about straightaway trades? This day, we do not have any pullback to give us an accumulation and stop hand and all that. What the market did was it just left the area and until it came there. So the market just went away. So what do you call that? You then call that your level 2 drop. All right. Remember we said in H1, every single day is a level, all right? It depends whether it is within a certain level or it's outside a certain level, but every single day it's a level, all right? So where is our level 1 consolidation? Here is our level 1 consolidation. Yes, you cannot see it. Remember what I said? Yes, you cannot see it, but your level 1 consolidation is here. It may not be seen because the market decided to just continue, but your level 1 consolidation is here. All right. So now, marking again, that becomes my level 1 consolidation. So I'll write all right, level 1 consolidation. And someone is asking, so all these levels in H1, in H4 are just level 1. Correct. All that you see right here, all the way up to peak 3 or peak formation 3, it's just level 1 H4. However, this I'm going to teach on another day again. There are some days whereby level 1, H1 levels are so clear in such a way that they are actually level 4 levels. That's a different topic altogether. But yes, to answer your question, those 3 levels or 3 rises are actually 1 level in H4. Again, if you want, go and backtest somewhere, mark your levels and get up to level 3, switch to H4. You realize to H4 is just a single move without any noticeable or considerable pullbacks. All right. So remember, we have level 1 drop, level 2 drop, and we never drew a line to see if anything closed below or above because we had a straightaway trade. But here comes this day now, right? On this day, we have marked a low, all right? Now, I want you to see something. We mark a low all the way up to there. Now, do you realize that when I said level 2 has got a lot of chopping and stuff, remember how level 2 presented itself here. Now see how level 2 is presenting itself here again. You've got the market pulling back up. You've got the market coming down, but it does not close below the low of the first level drop. Sorry, the second level drop. It actually closes within the level. So it means this sell, whether you took it on the day or not, you were still in level 2 sell. All right? And look at what happens the following day. The following day, market goes up. It even stop hands with that spike there, whether it was news or whatever, I don't know. It takes other people's stop losses out and whatnot. And then it goes down. It breaks that low. And then before the market close, it comes back and makes sure that it closes inside the level. Guys, this is not coincidence. I can zoom the chart for you so you can see. This is never a coincidence. It's deliberate. Look at that. They literally close inside the level. Or sometimes they can actually close right there outside, a little bit outside. Look at this one right here on this day. They had to make sure that the last candle closes inside, even if the wick touches the previous low. They just close it inside. They don't get the candles outside. This is not magic, guys. It's real. That's what they do all the time. So you just have to be patient, look at it, find out, all right? Now look at the third day, which is the 22nd of August. Remember, we started from the 1st, now we're in the 22nd, all right? And the market, what they did, they started outside. They went inside, they went outside a little bit, they went inside, and they actually closed far, far inside. Now we are still in level 2. And we have actually seen our level 2 consolidation. Now, where do you put this level 2 consolidation box? All right. I'm just going to make this one smaller so it becomes neat a little bit. You can either put it here, you can put it there, you can put it there, you can put it anywhere where you want. All you need is just a neat chart. All right. So I'm going to put mine right here because I want something that is neat. I don't want boxes crossing each other. Okay. So I'm going to put mine here. But I know whatever is below it is still part of level 2, all right? And again, guys, this is not a premiere video. This is a live video. I'm doing this live for you. It's not a premiere video. I didn't pre-record this. This is live, and I'm just doing it so that you guys can actually see how I mark my levels, okay? Now, this is my level 2 consolidation. Okay, and I'm gonna put it as my level 2 consolidation. We're almost done, guys, with our live, so just stay there. We're almost there. All right. Now, the next thing that you see is a massive drop. Now that drop right there is what we have all been waiting for to see go down. All right, I can put it here where price closed. I can put it here where price started as a stop hand low the other day. It doesn't matter, but that is my level 3 drop. All right, I'll just put it here for the sake of it being neat. So then I will mark this as my level 3 drop. All right, now we are in level 3 drop and we've seen the level 3 drop. Remember what I said, you are looking for price reversal. Now, where do you see price reversal? You see price reversal from level 3. So price has to turn. So I'm expecting a peak formation. All right, I'm expecting a peak formation. Whether they like it or not, I want to see a peak formation. I don't know how they're going to put it, whether they're going to give it a V or they'll run away from me or do whatever. I need a peak formation because I'm in level 3 and I'm sure about that. All right. So this is what happens. You then see your level 3 consolidation, or you can call it level 3 peak formation. Then we can mark this as a peak formation low L3. All right. And again, I'm not even checking what's in the future. I'm just looking at what's in the now so that you can see that I'm doing it this live. All right. Now we're going to zoom our chart a little bit and go back to see how we have gone. All right. And again, this I marked as a 3, but it's still peak formation. All right. It's still L3 and it's still peak formation low. Okay. I know you have heard this term several times, peak formation low, peak formation high. So that's why I'm doing it for you. So now this is how your levels are, and this is how you are seeing it from the second cycle. And now we are moving next. What do we want to see next? We want to see a rise, okay? So I'm gonna zoom again so that I don't see the future, so that if I make a mistake, I'll tell you that I made a mistake. Okay. So now I see my first rise. All right. This is my first rise. And now someone asked a question and said, look, sometimes the dealer might form a big W that's in between different days. Yes, we are looking for multi-days picks. For those who know Btmm, I can promise you, this thing that I see here, I'm going to divert you a little bit, all right? This thing that I see here, an M formation, this one right here, this is actually a reset. And you could have said, this move right here is my, oh, sorry about that. This move right here is my first level rise, all right? Because you're just seeing a peak on the same day and you're afraid you don't want to be left out. And then you see the market form an M there, and then it comes back down. Remember what I said about the 4 hour, that it comes back down to you because it want to form a second leg. And because this W is big and it's got a W, an M, and a W, it means on the 4 hour, it's actually a good M, a good W, sorry about that. Now, if I put a moving average on this chart, I promise you the 200 EMA has to move there to prove to you that this is a reset, all right? If that doesn't happen, I'll apologize, but I expect the 200 EMA to be there, okay? So 200 exponential, still there. Then I'll click OK. Now look at that, all right? My 200 EMA is not sitting exactly right there where I want it to be, right? But price was trying to push near it. Now I'll show you something. Let me put my 50 EMA, all right? So that you see something. 50 EMA and right there. Boom. Look at where my 50 EMA is. It's sitting where the M is. Now, why did the 200 not sit there, but the 50 actually sit there? The reason is because how do I put this? A smaller EMA on a bigger time frame is a bigger EMA on a smaller time frame. What do I mean by that? a 50 EMA on an H1, if you turn to the 15 minutes time frame, you will find where there is a 50 EMA there is a 200 EMA. All right. So if I go to 15 minutes and do this and look for that M, you'll find you've got the 200 EMA sitting there. That's what it means. But the 200 that was on H1, I can't see it anymore. It's no longer there in the chart. All right. The reason why it's no longer there in the chart, because a 200 EMA on a 1 hour is an 800 EMA on a 15 minutes time frame. So if I put an 800 EMA on this chart, I should have it right at the top where the 200 EMA was. Now I'm going to put dark blue and click OK. Do you see that? The 800 EMA, that is where the 200 is actually sitting on the 1 hour time frame. Today, I've just introduced EMAs for you, but we're going to deal with EMAs on another day. So what I'm going to do is I'm just going to delete those moving averages. All right. Now, going back to our counting of levels, right? We're counting our levels on H1. So what we have seen is peak formation low, which is L3. All right. And then, sorry, let me move this somewhere here. Then we have seen the rise. So I'm seeing the second leg. So I'm starting to count from my second leg, not on my first leg. But if it was in real time, I was going to start counting from my first leg and not my second, because I haven't seen this in the future. Now, notice how the same area where your M is, the one I was calling a reset, is the same area where your level 1 consolidation is going to be. Number 2, notice how the high of the same place, oh, sorry, I put a line. The high of the same M there is pretty much almost the same as the high of what we want to call our first rise. This is not a coincidence, guys. They do this knowing. All right. So even if you were going to count your levels starting from this first leg, because that's what you saw first, all right, you're going to say, I've seen level 1. Then price will sell on you and say, okay, it's coming back to the peak. Then when you start selling, you're like, okay, I've seen a second leg. Now I've got a bigger peak, so I'm expecting a bigger move. All right. Now I'm going to mark this as our first rise. All right. L1 rise. And again, thank you guys for joining this live. This is for you guys, something that I wanted to give you. And I'm doing this for you. And thank you very much for joining, because I don't want to be speaking to myself. I've been away for the past 2 years, and I'm thinking I have to come back and give people as much knowledge as I have, because I've been trading by myself on my own. And I feel like I was a bit selfish now. So I need to start helping people out, all right, with the little that I have. Okay. Now, this being my first rise, notice how if I mark this as the high of my first level, on the following day, price does not close above that high. Yes, it breaks it, but then comes right back into it, and he makes sure, remember what I said, guys, he makes sure the last candle is actually inside the level. Like right dead inside there, because he doesn't want to break the rules. Someone might ask, does Btmm work anymore? Blah, blah, blah. I always hear these questions. It does work, guys. If you don't know how to apply it, don't say it doesn't work. All right. And don't ask me the question if it works or not. It works. If I see a noisy chart, I can count levels for you. But if I give it to someone else, they might not. It's still fine, all right? Sometimes some of the charts, I look at them myself and I'm like, I don't have time to count levels on this. It's just choppy and it's going up and down. I'll leave this, all right? And it's fine. There is no problem with actually leaving a chart that you feel you can't count levels on. But if it's a clear chart like this one, then yeah, sure, go ahead, all right? So price closes below. Now, after closing below, this to me is not a level, all right? it is part of what we call level 1 consolidation. I know you thought I was going to introduce a new term there. No. Still the same terms, all right? Level 1 consolidation. I hope after this live, if you watch this live 4 or 5 times, I'm promising you, you should be able to count levels by yourself. So if we finish this live, for the next coming 2-3 weeks, rewatch it over and over again. This is going to be a game changer for you because it's going to help you out, okay? Now, after that, we then see price fairly move away, all right? Price breaks that high of level 1 and moves away. So what does price do? Price moves all the way up to there, all right? So price moves all the way up to there. So what do I call that? I call it my level 2 rise, okay? Level 2 rise. Now, do you notice and see that you have a bigger consolidation on level 1 this time, but on level 2 you have a very small consolidation and a probably straightaway trade. Yes, this is not a straightaway trade, get me right? It actually did stop hand. But if I am counting my level, my candles 1, 2, 3, 4, 5, 6, 7, 8, it looks like it never stop handed. All this was within the Asian box. So it's basically a straightaway trade, but if you like, you can say, yeah, it did pull back, but to me, it's more or less like a straightaway trade. Now, someone asks and says, does this work on volatilities? Sure, it does. Please go to my channel. You see plenty of videos where I mark levels. There's another video, the last video that I recorded for you guys when I was counting levels on volatility 10S. And there's another one where I counted levels on V75, step index, V10S, V50S. Go and see my recent videos. You have to see there whilst I'm counting for you. And volatilities have the noisiest charts you can ever have, but I did count levels there. One of my students, I gave them a setup and I said, we can enter V101S if you like. They took the V101S and they had money, you know, it moved up and it came to a certain point and I sent them a small video clip and I said, this is how I've counted my levels and I expect a reversal on this pair. And guess what? They closed some of their positions because I said so. Price did continue rising, which I feel they felt bad that, oh yeah, he said I should close, but price is moving. And guess what? On the very same day, price turned around. And I can guarantee you now, if you go to that pair, you'll actually see a peak formation. I'm not going to say the pair because people will go there and start entering positions and say, oh yeah, he gave us a signal on live TV. No, I don't want that. All right. So this then becomes our level 3 rise. Okay. So I'm just going to join these two boxes right here to make it look neat. So this is how you are supposed to mark your charts and leave them marked this way so you can track your price. All right. Level 2 consolidation. Okay. This is level 2 consolidation because there's literally no consolidation, but in theory there is, because one level in H1 is 1 day. So I think you've got this because I've said it several times. Now, then we get to what we call level 3 rise. So remember now we are in the 2nd of September. We're finished August and we're in September. So here comes the trade that I took. So I took the trade here, all right? Unfortunately, like I said, my entry was not best because my entry was sitting right there, all right? I would have wanted something that was around those areas there. If I had seen this early, I could have said, okay, yeah, it's coming to match the high. And just notice how the dealer literally does not, break the high crazily. He just gives a small whip or spike at the top, and then from there he quickly follows and just goes down. That's what happens, all right? It happens all the time, guys. So for those, like I said, who are asking me if this works or not, or works, any chart, you can give me any chart, I can do it for you, all right? Level 3, peak formation high. All right? I think I might have made a mistake somewhere. Did I write peak formation high on one of these peaks? Oh, yeah, this is where I made a mistake. I knew it. All right, so I was supposed to write peak formation high because we are high and we're expecting a drop. So sorry about that, guys. Okay, but this is a peak formation low. That's a peak formation high. So now I got to this trade, and what did I do? And entered on what we then call the first level drop. All right. So this is what we then call the first level drop. So what am I looking at here? All right. This is my low of level 1. And I'm just going to mark it my first level drop. So L1 drop. All right. So this is my first level drop. Now, this is what you need to know. This being my first level drop, anything that's going to happen on this day, it's either will give me my second level drop, or price will just decide to come back within the level. All right? Price will just decide to come back within the level and then close there and then give me a setup tomorrow. Then we can sell from tomorrow, whatever. But I can guarantee you, now that we have seen the peak formation high and we have seen level 3, chances are 97 or 8% of the time, right? By the time we get to Friday, if we did not get to another peak formation by Friday, then there is a likelihood they will never come back to this peak formation. The only way they can buy back to the peak formation high is if they want to do a second leg from a higher time frame. Now, this is not an analysis, and I'm not going to discuss about whether this pair is going to sell or buy today or do whatever. I'm not going to discuss that. I'm just showing you levels. So this is what you're expecting. So you've got what you call your first consolidation, because I haven't seen any considerable move of price in this area. I'm just seeing price just sitting there, or maybe price is exhausted about what happened yesterday or what I did to it yesterday. I don't know, but yeah, this is a consolidation to me until price makes a move. So this is how I'm treating it. Whether price makes a move or not, that's a consolidation to me. If price decides to come back inside, fair and fine. We are coming back inside into level 3 area because we are still within the level 1 drop. But if we go away, then I'll know we are now approaching level 2. Guys, this is how you mark levels in your chart. Look at how beautiful this is. All right. It actually shows you where you are going, and things like that. This is so beautiful, guys. That's how you mark levels in your chart. All right. And again, I'm saying this is not an analysis, but do you realize that when we marked the peak formation high in August, we haven't broken it, all right? We marked the low in August, end of August. So that's the low of, no, it's not the low of August. The low of August is that one on my left-hand side, but we marked that low there. We haven't broken it. So what you are looking for is to see if this continuation of levels is going to break this low. Immediately when it breaks this low, then you know that you are now on a downtrend. All right? You are now on a downtrend. So you are making lower highs and lower lows as you go. But can you see that it still cycles? So cycle down, but this cycle that goes up, they made it short. And then now they're giving us another cycle. If they want to make it longer too, then they will give us a shorter one, a longer one, a shorter one as we go. In terms of 4-hour levels, now then we say this is a whole level in 4-hour, all right? This is another level in 4-hour. This is another level in 4-hour, and we're expecting another level in 4-hour, all right? As you can see, it's already, your boxes are already showing you that you're on a downtrend. All right, so I'm just gonna wrap this, but that is generally how you mark your levels. So someone is asking that, okay, so does this apply on all time frames? Yes, of course, it applies on all time frames. Unfortunately, I'm not gonna mark levels on a 4-hour time frame because this is gonna be a different topic altogether. But yes, as after you have marked your boxes, as you can see, you have marked your boxes in here. So you can literally come here and say, this is my 4-hour level, all right? And then you can say, that's my 4-hour level. And then this is a pullback, though it is still a 4-hour level, but it's a 4-hour level against your trend. Then you are expecting your level 2. I don't know if that makes sense. So this becomes a pullback, even though it's still a level, but it is a pullback because it's against the direction, all right? I didn't say this is a sell, get me right, okay? Then this becomes your second level. So you expect this to continue happening until you see a third level, all right? Now, if you turn to D1, then you see, like I said, I didn't say this is a sell. Get me right, okay? I didn't say this is a sell, but that's what you're looking at. Now, just to show you a tip, but we're gonna do this on a separate video. You can come here and say level 1 for D1, level 2 for D1, and level 3 for D1. If you wanna do a market maker cycle, you can say peak formation, all right? And then you can say up and a pull back here. And then you can say up and a pull back there. And then you can say up. Or you can match this and that as a pullback. Again, this is a topic for another day. But can you see those 3 levels all through? Now, I'll keep on shocking you. Look at this. You see? A whole level, a whole level, a whole level. Now, if you see those 3 levels, what you expect? A reversal. So that's why you had a reversal there. Now, another 3 levels. So if I put a 200 EMA, I should see it appear here. All right? Like I said, this is a topic for another day. I'm closing and I'm just trying to answer someone's question. Okay? So if you get something out of these 2, it's still good. All right? I'm going to put this as a black color instead. All right. And then I'll click OK. Look at that. Your 200 EMA is actually moving there. So that's what you call a reset. Price moved 3 levels up and then price gave you a reset. Price then moved 3 levels up. So now this means on W1, this is 1 level. This is 2nd level. So it means if we look clearly from our left-hand side, we probably should see another level again. I don't know. Maybe this is another level again somewhere here. I don't know. All right. I'm not going to count this for you, but that's what you're looking at. Look at your W. All right. I'm just going to load my template once again. All right. And again, this is not a signal, guys. All right. Look at all that. Okay. This is not a signal, guys. But the market will always do it all the time. And then what does it do when it gets to a peak formation? The market decides to reverse. Thank you very much, guys. I'm sure you learned something. We're going to do the higher time frames on a separate live video. But thank you for coming in and, tuning in and listening to me. We started this at 9 p.m. Now it's 10:15, an hour and 15 minutes. And again, I'm encouraging you guys, please watch this video. This is not for my views. And I can tell you straightforward, my channel is not monetized yet, or it is not monetized. Yes, that's the reality. So I'm doing all this for free for you guys to watch and learn. So re-watch these videos. If I post a video, I'm not doing it so that you can have 200 to 300 views and then you'll be like, oh yeah, that's an old video. Go back to those videos, guys. All the information is there. I'll keep on repeating the same thing over and over again. And I promise you, very soon there's going to be a live YouTube session for almost 2 to 3 days where we're going to be learning concepts of Btmm. And then I'm going to teach you. Then after that, I'll discount my services and let you guys join if you want. If you don't want, you can then still use the same knowledge to do whatever you want to do. But again, guys, this is for you. It's your package. Enjoy it. Watch it over and over again. And I'm about to sign out. Thank you very much for listening to me, paying attention to me, taking your time to grasp all this. And I'm sure you learned valuable lessons. And I've seen the number was playing around the 50s, around somewhere there, and it never decreased, which means you guys are dedicated and you're willing to listen to whatever I was saying. And even if you still feel like I was lying to you and all, but you saw where I'm coming from. So thank you very much, guys. I'll see you on the next one. I'm ending this broadcast. All right. Enjoy.